Hey everyone, welcome back to our channel, where we dive into the big questions shaping our world. Today we're tackling something monumental. What happens when the global market fails? You've probably heard phrases like market crash, recession, or even depression.
And they're seeing these big negative numbers and their confidence gets affected.
What exactly do those terms mean? And how do they affect every area of our life, from what we eat to where we work? Stay tuned, because by the end of this video, you'll understand not only what occurs when markets crash, but also why it matters to you. Let's dive in. First, define global market failure. A market failure happens when the traditional supply and demand mechanisms fail. However, on a global scale, this includes interconnected economies, trading systems, and financial markets. Think of it as a massive spider web. If one section of the network is damaged, such as the failure of a big bank or a rapid drop in oil prices, it can send shockwaves throughout the system. So, global market failure is not simply an issue for one country. It affects everyone. But what causes these failures? There are several triggers for global market failures. Let's break them down into four major categories. 1. Financial crises. When banks fail, lending stops and businesses can't grow. Remember 2008? It all started with risky loans and a housing bubble that popped. 2. Resource shocks. Think sudden spikes in oil prices or food shortages. For example, the 1973 oil crisis crippled economies around the world. 3. Geopolitical instability. War, trade wars, or sanctions can disrupt global trade. Case in point, the US-China trade war in recent years. 4. Climate-related disasters. Floods, droughts, and other climate events are increasingly affecting global agriculture, energy, and supply chains. When one of these events happens, markets can wobble, but when multiple occur simultaneously, that's when we see full-blown crises. What happens when global markets crumble? The effects are far-reaching. Let's break it down. 1. Economic downturns. Recessions and depressions take over. Companies lay off workers, savings are wiped out, and consumer spending nosedives, fueling a downward spiral. 2. Currency crises. When trust in economies erodes, currencies can collapse. Think of Venezuela's hyperinflation or Argentina's peso devaluation. 3. Social unrest. When unemployment rises and food becomes scarce, social unrest often follows. Remember the Arab Spring? High food prices were a key factor. 4. Responsibilities and bailouts. Governments and central banks step in with bailouts, stimulus packages, or austerity measures. But these come with long-term consequences, like rising national debts. Alright, it's not all doom and gloom. Humanity has weathered market crashes before and come back stronger. So how do we get ready for the next one? 1. Diversify economies. Nations need to spread their investments across various industries, reducing dependence on a single sector. Take Saudi Arabia, for instance, working to expand beyond oil. 2. Strengthen global cooperation. Organizations like the IMF and World Bank are essential for stabilizing global markets. But let's be honest, there's still a lot of room for improvement when it comes to international collaboration. Now, what about you? On a personal level, it's all about building resilience. Diversify your investments, save for emergencies, and stay up to date with economic trends. Here are some actionable tips. Start an emergency fund, pay down high-interest debt, and learn the basics of risk management. Global market failures are scary, no doubt, but history shows us that these crises are also opportunities to learn, adapt, and innovate. By understanding what causes them and how they affect us, we can be better prepared for the future. If you found this video helpful, give it a thumbs up, share it with your friends, and don't forget to subscribe for more insights like this. And tell us in the comments, what do you think is the biggest threat to global markets today? Let's keep the conversation going. Thanks for watching, and we'll see you in the next one.